Well, we think next year will still be a difficult year in terms of defaults. So our estimate that this year, in terms of China property high yield default rate, in terms of the amount outstanding, we estimate this year is close to 28%. We do think next year will be better, but it's still going to be quite high. Our base case is at 11.5%. So you're still going to see more stresses coming through. And obviously, there's quite a bit of risk to that number as well. We also have a downside case, which is around 25%, and also an upside case around 4%. And so we're really looking at still quite a difficult, relatively difficult environment, given that defaults will stay elevated. But we don't think this should be a sign that investors should be negative on the market. Certainly just need to be a little bit more cautious.
Right, but what does this specifically mean for the education and TMT sectors in China that have also been hit hard because of the crackdown?
Yeah, I think it's interesting to look at how the education bonds have reacted. So obviously, there were the regulatory changes that happened in July. And then in the immediate aftermath of that, you saw these education sector bonds actually drop quite noticeably, but they have since rebounded. So even though these companies, the bond prices are lower than where they were prior to July of this year, and there's been a number of negative rating actions, these bonds are not pricing at stress levels. So we think that's quite interesting, and we think there's a couple of reasons for that. One is these companies have strong balance sheets, so clearly that adds a layer of support. The second is that they also have businesses that are not affected by these regulations. So we think it's important not just to focus on the regulation, but also, do they have diversified revenue streams and how much cash they have on balance sheet as well.